Welcome to the chapter on accounting information systems. What we've looked at so far has been everything done manually, and we've pretty much used a general journal and a general ledger. We're now going to take a look a little bit at computerized accounting systems, and we're going to particularly look at subsidiary ledgers and their counterpart, which is special journals. And the subsidiary ledgers and special journals save us a lot of time, allow us to do some division of labor, helps prevent errors. So all of these are going to be pretty useful. Small businesses, and I do mean small, might be able to get by with manual accounting systems, but almost everybody today has got some computerized thing. So by definition, the accounting information system collects and processes transaction data, communicates it in some sort of useful manner to decision makers. It participates or helps in all the steps in the accounting cycle. Obviously, it doesn't do the analysis piece for us. It provides documents that provide evidence of the transactions, and it can be manual or accounting or computerized. Some basic concepts here, but it needs to be cost effective. You can always spend more money on your accounting system, but at some point spending more money doesn't get you any more benefits. We want useful output. The cartoon characters here, the balloons, that must be relevant. I want it to be reliable. I want it to be accurate. It has to be timely. I want all those things in the accounting system, and they all cost money. And if you want all those things, the more timely you want something, the more costly it will be. The more accurate you want, the more costly it will be. And finally, flexibility. The system should be flexible enough to take into account today and what we might be doing tomorrow. So computerized accounting systems typically functions include sales, purchases, receivable, payables, cash receipts, cash expenditures, and payroll. It'll generate financial statements, probably all the ones you want. Advantages, you only have to enter data once. A lot of human errors are eliminated because the computer can add and subtract better than we can. And you usually push a button and get a financial report. So there's really multiple levels, but they talk here about entry-level software. In my mind, that's something like QuickBooks or Peachtree. And it's easy data entry, easy report system, has minimal aspects of an audit trail, but enough that you can follow it. And then we get to the larger businesses, the Tysons of the world, the former Terras of the world, the Mid-American Energies, who all have enterprise resource planning systems, very large, complex systems that will generate a host of financial data. Contrast that with manual accounting systems we've been working on. Each step is done by hand, satisfactory only with a low volume of transactions. And you must understand manual accounting systems to understand computerized accounting systems. So it makes some sense for a textbook here to start teaching manual, but at some point we need to make a transition to computerized. Finding and fixing errors is much easier if you understand the processes than not. Little ethics insight here. The Sarbanes-Oxley Act, abbreviated SOX, of 2002 requires companies demonstrate to have internal controls in place to detect fraud. And as of November 2005, about 15% of publicly traded companies reported at least one material weakness in their controls that need to be remedied. Again, if you want to spend enough money, you can eliminate all your weaknesses, but doing that is an expensive business. So subsidiary ledgers, I don't get to use that word very often, only in accounting, I guess. Subsidiary ledgers. They're used to keep track of individual balances. The two we're going to look at closely here is accounts receivable, i.e. what our individual customers owe us, and we'll have a ledger, an account for each customer, and then accounts payable where we'll have an account for everybody we owe money to, an individual account. The individual accounts get totaled, and so the sum of the individual accounts receivable becomes our balance in the accounts receivable general ledger account. Almost anything you have multiples of, say you're a company who does a lot of business with notes payable or notes receivable, you would probably have a subsidiary ledger for that. Later on, when we look at equipment and depreciation, you'll find that we record assets, equipment that has a useful life for more than a year. We record in a subsidiary ledger and keep track of it that way. So the relationship of a general ledger and subsidiary ledger, you can see here that Aaron Company has a $2,000 balance, Brandon has a 0 balance, Karen Company has a $2,000 balance, so 2 plus 2 gives us 4, and that's the balance in the general ledger. So the balance of if you total up the individual accounts in the subsidiary ledger, it should agree with the balance in the general ledger. Advantages, you can show in a single account transaction affecting one customer, one creditor, as opposed to merging a whole bunch of them. Gets all the detail out of a general ledger. The general ledger would get real crowded if we recorded every little thing in here. Helps locate errors in individual accounts, and it makes possible division of labor. We can divide up our duties that way. So we got special journals here. We have special ledgers, now we have special journals. Now we have a sales journal, and it's used for all sales of merchandise on account. Notice that the word all is used there. You know, that's seldom in life you get to use the word all and believe it. But in this case, if it's a sales and it's sales of merchandise and it's on account, it's going to go in the sales journal. Cash receipts journal, it's used for all cash received, including cash sales. So if you're receiving cash, an amount of cash, it goes into cash receipts journal. Purchase journal, used for all purchases of merchandise on account, things that we're going to resell. Cash payments journal is used for all cash payments, including cash purchases. And then the general journal is used for everything else, things that won't fit in one of the special journals, correcting entries, adjusting entries, closing entries. So in summary, at the bottom there, if a transaction cannot be recorded in the special journal, you record it in the general journal. So quick review here, each of the following is a subsidiary ledger except, and that would be D, the general ledger is not a subsidiary, it is the general. Special journal, sales journal. Here's a typical one. This is for a perpetual inventory system. And you remember in perpetual we're always tracking inventory, and we record the cost of a sale at the same time we record a sale. So we have a column here that's the customer who's buying it from us, the invoice number, and this column gets both a debit and a credit. This is the accounts receivable and sales, and this column deals with the cost of goods sold. It's a debit to cost of goods sold and a credit to merchandise inventory. The individual amounts, the 10,600, 11,350, all get posted to the accounts receivable subsidiary ledger. The total here of the 90,230 gets posted both to accounts receivable and to sales. So here's an illustration of that. The 10,600 to Abbott Sisters gets posted as a debit in the accounts receivable subsidiary ledger. 11,350 to Babson gets posted there. Notice that the totals here, the 90,230 gets posted to account 112, which is going to be accounts receivable, and account 401, which is going to be sales. The totals over here, cost of goods sold column, that 505 is debited, and merchandise inventory account 120 is credited. And here's the example of how they posted those things to the general ledger account. So posting to general ledger is done once a month. Posting to the subsidiary ledger is done daily, so that if a customer calls and wants to know how much they owe us, we can look it up and tell them immediately. Or if a customer, if that account balance gets too large, hopefully our software will flag it and say we better quit selling to these people on credit until we collect something from them. So advantage of sales journal, it's one line entry. If we did this in a general journal, we have to debit accounts receivable, credit sales, and then we have to make an entry for the perpetual merchandise. Sales journal is just one line. Only totals rather than individual entries are posted, and we can have a potential division of labor. Illustration here of cash receipts journal. In the cash receipts journal, companies record all receipts of cash. And the posting of a cash receipts journal is similar to posting of sales. You post individually, your DA Carnes 301 gets posted individually. And accounts receivable items, as in Abbott Sisters, gets posted. And a little check mark here means that we posted it to the subsidiary ledger. And then we total these items up so that in our cash column here it totals 53,769, and at the end of a month we will put a debit in our general ledger account to cash for at 53,769. We'll do the same thing with those other column totals, except for the other accounts credit, and those since they're going to multiple accounts, it's a catch-all column. They get posted here and here. So another quick review question. Cash sales of merchandise are recorded in which of these? And it would be B, cash receipts journal, because all cash receipts get recorded in the cash receipts journal. Example of purchases journal, where we're buying things on account, and we have an accounts payable subsidiary ledger to keep track of who we owe money to. So that we bought something from Jasper Manufacturing on May 6th. These are the terms, $11,000, and that got posted to Jasper here. And we put a little check mark here to indicate we have it posted. And we reference over here, P1 means that it came from Purchases Journal, page 1. The totals get posted at the end of a month. The 63.9 gets debited to merchandise inventory and gets credited to accounts payable. So a review question here. All of the following are examples of using subsidiary ledgers, except they like A, show transactions affecting one customer, creditor, in a single account. 3, the general ledger, excessive detail, that's true. Eliminate errors in individual accounts. Or D, make possible division of labor. I'm going to guess it's C, because we really probably can't eliminate errors in individual accounts. Aren't we lucky? Cash payments journal. Again, this is for all cash payments. We've got a first column here shows the date. The next one is the check number. This is an account debited. Reference. We put a reference in there once we post it. We have other accounts debits. We have accounts payable debit, a merchandise inventory credit, and a cash credit. So credit purchases of equipment or supplies other than merchandise are recorded in the cash payments, cash receipts, general, or purchases. Well, it's not A because it's a credit purchase. So it's not A or B. There's no cash involved. It's not D because purchase journals are only used for purchase of merchandise. So I'm guessing it's going to be C. Yes, indeed. Another review question. Cash payments of merchandise are recorded in the cash payments journal. We can stop right there because it's cash payments. It has to be in cash payments journal. So effects of special journals on the general journal. Special journals substantially reduce the number of entries that companies make in general journal. Frankly, if they didn't, it'd be just most general journals would be too massive. So we specialize. We break this stuff down. Only transactions that can't be recorded in special journals are recorded in the general journal. So it's complex things, non-routine things that get recorded in the general journal. The routine stuff, buying, selling, that sort of that routine stuff all gets recorded in special journals, and we're not apt to make mistakes there. It's the complex, unusual transactions that we're apt to make mistakes. They get recorded in the general journal. It's easy for somebody to review what we've done in the general journal. And finally, correcting, adjusting, and closing entries are made in the general journal.